Lisa, I mainly wonder about, after we heard what we did from JP Morgan this morning, preparing for people not to pay back loans in the future, given that that's already what's hitting crypto, are there implications for fintech more broadly because of crypto exposure?
Yeah, so within the fintech space, some of the areas to watch are, so with companies like a Block or a PayPal, they do have about 6% of revenue directly from their lending products. These are a combination of primarily small business loans, but small businesses are usually essentially individual loans. So we're monitoring the risk losses in those pieces of the business. And then in addition, they're more, I would say, more heavily tied to on the positive, when you're asking the question about crypto, the good news is that places like a PayPal wallet or a Block wallet or even a Coinbase, because it's a publicly listed company, so they have to meet all of the SEC filings and you can see exactly where their reserves are a bit safer havens. So these, if someone's not going to self-custody their crypto and put it on a hard drive, they want to put it with a third party, we will likely see some movement of assets into these sort of safer crypto names during this downturn.
I wonder how the individual investor should frame the risk in crypto. And I'll preface this by saying, of course, crypto could go up from here, of course. But if it drops, right, another 10, 20%, there's the risk that some people just won't get any of their crypto-derived gains at all, depending on where it's stored. And there are, I guess, the risks to other elements within the crypto financial system as we talk about counterparty risk and contagion.
Mm-hmm. Yeah, that's right. I mean, Kate was highlighting the key point, which is for an investor, companies that are more on the margin, like a PayPal or a Block, I mean, crypto is only a couple % of their revenue, so it's really not a relevant, or important risk to the investment theses of those types of names. Things like the overall consumer spending levels are much more of a concern. But obviously with a company like Coinbase, that's the central business. And the risks are twofold. One is, if you're investing in the stock, you want to be monitoring with a company like Coinbase. If asset values in crypto go down again, right, that's just another hit to revenues. And you start to really monitor cash flow. Like with Coinbase, we're monitoring cash flow really carefully because you want to monitor the burn levels. Right now, they're fine. They're sitting on $6 billion in cash. They're only burning at a rate of maybe 500 or so per year. Like the cash burn's okay, but we're monitoring it really closely.